We are going to continue our look at housing now with Patrick Newport, a U.S. economist at IHS Global Insight and a Bloomberg best economic forecaster. He says the July permits report may matter more than last month's housing starts. Pat joins us now from his firm in Lexington, Massachusetts, to explain. So, Pat, I think the numbers that came out this morning were slightly contradictory, but we've seen a lot of that lately in terms of economic data. What do you take away from them, and what are you more focused on?
Well, I focus on the permits because they're a better indicator than the starts. They don't jump around a lot, and they're a good forward indicator. And basically, they're telling you two things. One is that the single-family market is stuck at the bottom. We had a decline in multi-starts in July, but that followed a couple of good months prior to that. The multifamily market is slowly coming back, but the single-family market, which is the one that everyone focuses on, has been stuck at the bottom for the last 4 years, and it's probably going to stay there for another year.
Patrick, what do you think about inventory at this point? I mean, we were listening to Warren Buffett. He was on Charlie Rose last night. You know, to rely on home building as a way to resuscitate the economy, isn't that more of what got us here in the first place? You know, maybe home ownership just has to come down. Maybe we have to live with the fact that 80% home ownership, 70% is not tenable.
Right. I think it's got to work the other way around. I think the economy has to get back on track. And more than anything, we need to see housing prices hit bottom in order for the housing construction market to come back. And I don't think that's going to happen until sometime late next year, maybe into 2013. But it doesn't appear that it's going to happen anytime soon.
Are there any pockets of strength out there that you look to that suggest perhaps that the economy is not in as bad a shape as it seems right now?
Well, the economy is stalled, and that's what most of the incoming evidence is telling us. Consumer spending, for example, was very weak in the second quarter, very weak in June. The manufacturing sector stalled, and on top of that, there's just a lot of uncertainty created by the debt ceiling negotiations, what's happening in Europe, and all the uncertainty is just adding to the problems that we're facing right now. So the economy is weak. There's an increased chance of recession because it is weak, but it's still growing, still adding jobs, but it's not growing nearly as much as we, or more important, the Fed, thought it would be doing 6 months ago.
Patrick, a lot of economists, they seem to be in disagreement at this point as to whether or not we're just in a very slow recovery, maybe slower than originally anticipated at the beginning of the year, or whether or not we are sort of on the cusp of a double-dip recession. Where do you fall out?
Well, we think that the chance of a double dip are about 40%, but the economy is very weak. Our view is that this recession is very different from every recession that we've seen since World War II, and this is a recession caused by debt, by problems in the financial system, and these recessions take a long time to get over with, and we're going to probably see more weakness at least for another year, probably 2 years.
All right, Patrick, we have to leave it there. Thanks so much for joining us here on Fast Forward. That was Patrick Newport.